And he joins us now live from our Hong Kong studios. All right, thank you so much for dropping into our studios today. What are your thoughts about the about the non-farm roll payrolls number? Some people putting it at a modest 500 million, 700 seems to be the median, and one report putting it as high as 1 million. What are your thoughts?
I think that the report will indeed be very negative, but I wouldn't expect a figure much higher than 500,000. We are going for 550,000 based on several private sector reports and weekly data from last month that are pointing to indeed continued substantial job losses. However, one report, ISM non-manufacturing, measuring employment in the private services sector, suggests that in that segment of the labor market, losses will be smaller than last month, which means that a dramatic figure close to 1 million is highly unlikely.
Okay, and if we get a figure that is close to 1 million, as some people say, then what's that going, and how's that going to impact the markets tonight, especially when in New York?
Such a negative number would definitely suggest that the economy is deteriorating much faster than anticipated and that consumers will further contract their expenditures in the first half of next year. So investors would have to adjust to an outlook of much steeper GDP contraction and further decline in corporate earnings, which would be a huge hit on equities and commodities, as well as the dollar, but on the other hand would support prices of treasury bonds. But again, I don't think that we will see such a dramatic number.
Okay, well, you know what? Hold your thoughts there because we have to head out for a break, but you will be back with us after this short break. Dariusz Kowalczyk, their Chief Investment Strategist at SJS Markets. Chief Investment Strategist at SJS Markets. You know, Dariusz, you were talking about the U.S. Just one more question. You know, Obama's plan, stimulus plan, much of it revolves around tax cuts, and yet some people say his tax cuts are only about half of what Bush did, and that he should actually be focusing more on job creation. Your thoughts?
Well, I agree that it is quite worrying to see 40% of the stimulus package going to various forms of tax cuts, because probably that money will be rather saved than spent, and therefore its contribution to GDP will be lower than it could be if the money was spent on fixed asset investments. And therefore we have revised down our outlook for this year's GDP growth to a small contraction of 0.2% from what we earlier expected to be a 0.25 percentage point expansion.
Okay, let's move on to Asia now, especially with Japan expected to be in further economic contraction, as we heard earlier from our other analysts. Ultimately, as the U.S. economy contracts further, how is that? How much of an impact are we going to see in Asia?
Asia is hugely dependent on its growth on exports. Over the course of this decade, this dependence has increased dramatically. So any fall in external demand is going to hit our growth rates very sharply. And in fact, I think that our continent, unfortunately, excluding China and India, will be the worst performing economic region in the world this year. Japan itself will contract by 1.3 percentage points because of the strength of the yen that is exacerbating the weakness in external demand. And the region will have to wait for the US to come out of recession and again starting to buy our goods for expansion to return to Asia. And it will probably happen in the second half of this year or towards the end of the year.
And ultimately, we're in a historic time in that interest rates have never been as this low. You look at the U.S., you look at Japan, you look at, you know, across in Europe, and yet many countries also taking up this plan to build themselves out of recession, just like what Obama's trying to do. When can we start seeing these effects coming around? The second half, or?
We believe that the fiscal stimulus packages announced around the world, with the exception of China and Korea and the US, are not large enough to generate domestic demand that would help the economies out of the recession. So everybody has to wait for the US to emerge out of it first. Our forecast is that the first quarter of expansion of US GDP will be probably already Q2. The latest, it will be Q3. And with a delay of 1 to 2 quarters, this expansion will translate to gains abroad, especially in exporting countries in Asia. So recession recession in our region will end either in Q3 or in Q4.
Okay, and also let's briefly talk about Satyam and the corporate scandal. We're going to, of course, talk about that with our guest later on. But you think that this is actually going to hurt the general corporate confidence in corporate India?
I think that the damage will be probably limited to the outsourcing sector, which unfortunately for India in this case is a large part of their exports and a big component of the overall GDP. There has to be damage because if you outsource any important operations abroad, you have to be confident that whatever your partner is doing is credible. Now the confidence is lost. It will take a while to be restored.
And also, briefly, before you go, you know, you're probably saying that Asia is pretty much coupled with the United States. Any countries or sectors that you think are more resilient than others?
Yeah, paradoxically or ironically, it will be India because overall their dependence on exports for GDP growth is relatively low. And there has been quite substantial reduction of interest rates there. So I believe that despite the Satyam saga, we are going to see India being the fastest growing economy this year in the world. And our forecast is expansion of 5.5% for their GDP in 2009.
Okay, brilliant. Thanks for that. Dariusz Kowalczyk, Chief Investment Strategist.